All right, welcome back to the security token industry. We've got another security token show interview. We're talking to the one, the only, the tokenized real estate king of this industry, Ed Nwokedi. Ed, thank you so much again for joining us.
Kyle, thank you. I really appreciate being here. It's always good to be on your show, man. You know how to bring it. You have the right audience. I feel like I'm speaking to my clientele, which is awesome. Thank you.
Absolutely right. And we are here with positive energy as always, but today is actually a pretty good day because of the fact that you're officially live with the RedSwan crowdfund. Congratulations on getting it through to this launch date.
Hey, thank you. You know, it's taken a lot of time with all the legal, all the registrations, but yes, we are totally live. That invest now button is functional. It goes right to our landing page. It gives you a lot of information about our team and our mission and our use of funds, but we're looking forward to a very successful raise.
Are you hosting this crowdfund through your own broker, or are you working with a different broker to make that happen?
We are using our own broker for the broker-dealer side of it, but we are using the platform as Core Connects, which nice. Has a lot of experience in doing Reg Ds and Reg CFs.
Yeah, and they've been pretty active in this industry for quite a few years now, right?
Yeah, they're awesome. I mean, you can launch that off of your own website. So you have your own web traffic coming in, and then they can click the Invest Now button, and it takes them through that investment cycle, that process. And then our broker dealer is the one that actually finalizes all the transactions. But we are getting the data, we're getting the traffic, and we're able to now see and manage everyone who's showing interest in RedSwan.
So you're through phase one, the testing the waters and getting all that documentation done. Now you're into phase two of the crowdfund is live. What has that been like for you so far? I know you've been traveling all over the country and you're set to go all over the world. Can you talk a little bit about what you've been up to?
Well, yeah, we've been getting the crowdfund organized. That's done. That was really not a lot of my effort, most of my team effort, and I thank them very much for the time they put into it because it was very tedious. But we've been really just consistently building on our platform. And when I say that, I know people say that a lot, but really, we see this as a building block of technology, resources, partners, property, and investors, and all on one platform. So we find ourselves, making sure that, our compliance, we are compliant with the SEC for our IRA. We also have our SEC letter for the broker dealer, and we're finalizing our interviews with FINRA for that membership. So compliance, we feel is in a bucket that we can check. We have a team we set up with RedSwan Market, which is our broker dealer division. We have hired 4 new people in that division. So we have our compliance person, we have our CEO, and we have also our broker dealers who are helping us with sales. So that's done. We are still raising a lot of deals through sponsors who are looking for properties, and that's an ongoing process, interviewing sponsors who want to put their property on our platform. We have been very diligent about looking at deals, and I think we might say yes to maybe 10% of deals that come through. But we just want to make sure we have high quality vetted deals for our customers. We just announced a big deal in the GCC, so that's turning our direction to that market. We're excited about it because we know that's going to bring a lot of eyeballs to the United States as we see a lot of capital in the United States is necessary. But we've just been really busy. Every day we're working on our initiatives, and I think things are getting better and better. I have a different vision and also a level of understanding of what's happening in the market as it relates to institutional investors, from the IRA level, from the broker-dealer level, and from big corporations like Fidelity or Goldman Sachs, because we're in regular conversation with them. I'm going to say every month we're talking to them about where we are, where they are, what they want to do, how we can integrate. And then we're signing contracts too. So Hedera was a big contract, and that's going well. We're building our token studio on Hedera so that their 6 million members will be able, users be able to access digital securities very easily. That we'll be able to accept HBAR for HBAR the stablecoin. I want to make sure I put that out there. The stablecoin as currency for our assets. So all this has come into play, and I think that it's so important to build this bridge for this transition period, because it's not a matter of, if, it's just a matter of when and how big, because, about the transition of wealth that's taking place. This is a big topic at the IRA conference we went to last week. There's over $86 trillion of assets going from baby boomers to millennials over the next 10 years. And they're all trying to figure out how to work with these new investors, how to communicate. And we're building our technology and building our platform so that we have an easier way to communicate, an easier way for them to buy securities off of their cell phone. And we think that's what's going to be driving the markets as time goes on. Not the traditional way you're seeing it done right now. A lot of them are retiring, aging out. The process to buy 50,000 shares of a LP investment through a broker dealer could take an hour and a half. The process to buy 50,000 shares with 15 different investors who are buying 50,000 shares on our platform could take 15 minutes. So from the SEC or FINRA, it's a significant advantage in terms of efficiency. But from our standpoint, to meet the demands of this new generation that's coming down, that we think is perfect. It's a perfect match.
Well, I love your enthusiasm, and you certainly have a wealth of expertise, because you gave me like 4 different ways that we can take this conversation based off that answer. And hopefully throughout the interview, I'll be able to circle back to all those different pieces, because I'm really interested to pick your brain. I want to start with institutional investors and traditional real estate people and why they're getting so excited about this. So could you talk to me a little bit about, first off, before we necessarily dive into investing in fractional real estate, but you mentioned kind of their perspectives on the given climate right now. How is that affecting the way that they're looking at investing in real estate and investing in this industry, and as well as investing in RedSwan, because of what we're seeing with mortgage rates and inflation and all these things happening right now that are so relevant to these types of industries?
Yeah, well, great question. On the institutional level, as well as on the private level of sponsors who own projects but may not be a multi-billion-dollar company, they all have the similar problem that capital is hard to find right now. A lot of these properties have mortgages that are maturing in the next 18, 24 months, and the gap from where they were in terms of value, from a loan to value basis, and the gap to where they are right now in terms of loan to value is almost a 30 to 40% difference, right? So somebody has to make up that difference. The value won't really change that much, because when interest rates go up, cap rates go up, and the value comes down. So it's basically the bank has to determine how much of that new value they want to finance. And many of them are becoming very conservative because of the losses they've already faced on the previous investments. So they're only going 50 to 55% loan to value or loan to cost on a depressed value already. So for many sponsors, that's a big problem, because in order for them to get financing on their deals that are maturing, they have to bring capital. They have to bring $5-10 million to match the bank's money, so that therefore the bank has that 55% LTV. That's a really tall order for them. So we're solving that problem by using private money, which is retail investors, to be able to crowdfund in and hopefully fill that gap. So that's why there's demand from the property owners, but we're also seeing huge demand from the major institutions. I won't mention the names because no one likes to be highlighted when it's negative.
Funny how that works, isn't it?
Only
they
one
want
is
all the benefit,
positive, right?
They want none of the recognition.
Yeah, exactly. They don't want recognition right now, but they all have a similar problem. Many of them have been raising money through high net worth individuals, and basically there's no liquidity. They put their money in, and there's a period of time where they're going to get their money back. They do allow for redemptions, especially on private REITs. They allow for redemptions, and for them today has been a major problem. So big institutions no longer want to just go after the high dollar investors. They want low dollar investors. For example, Hamilton Lane, right? They had a big real estate fund that they were offering, and the minimum investment was $2 million. Well, they've tokenized that fund, and now the minimum investment is $10,000. So is it more difficult for them to bring in $10,000 from more people than it was $2 million from fewer people? Probably so. However, on the blockchain, because it's a real fast transaction, their benefit is they can bring this capital in, but they don't have to worry about giving it back, right? They don't have to worry about redemption, which is a huge problem for BlackRock, for all these companies that have a hard time paying off redemptions. So now with digital securities, the redemption comes from the owner of the asset selling their securities on the private exchange. So that's a big change, and I think a big reason why they're in love with what we're doing.
That's actually really interesting. And while some of these concepts we've talked about in the past together, and I've certainly talked about them on the show quite a few times, what you said there, I think, is really, really poignant, and something that no matter, it takes a lot of times, I think, of hearing the same thing over and over to really have it stick, especially with some of these more complex topics, that this idea of relieving some of the pressure by these larger funds with allowing the secondary liquidity. And everybody loves the idea of secondary liquidity to trade or whatever, but hearing it as a potential substitute for some of the redemption pressure and that kind of removing the responsibility from the underlying fund manager and instead providing that opportunity to the retail kind of peer-to-peer transaction makes a ton of sense. Is that what you're seeing is a real driver behind some of this stuff, or are there additional benefits that are most exciting?
No, I think that's hit on the head. I mean, the secondary market for redemption for large organizations, that requires them to have a reserve, and this reserve could get depleted if many people are asking for redemption. And in a down market, you have many people asking for redemption. In some cases, they put up the guardrails and say no redemption, right? So I think it does relieve a lot of stress and also cash flow by allowing the secondary market to act as the liquidity factor. And I think with RedSwan creating this type of digital asset that allows for that secondary market is something they're very interested in. So not just, one major institution, we have several of them calling, and also several of them who own real estate are asking, who have funds, are looking to tokenize a percentage of their fund because they believe that it may be more attractive to a certain one of their customers, which are their younger customers, right? So if you're offering a fund of $1 billion or $500 million, and you have the gateway that allows you to buy it traditionally, which is an analog share, or you now have the option to buy a digital share, people who understand the digital share are going to opt for that first, especially if it doesn't cost anything different. So, and that also benefits the fund much better because of redemption, but it also gives them an option to look cool, look like they're staying current with technology. And so this is why they're calling us and saying, hey, how can we work with you guys?
Right. I think that makes sense. And certainly the tokenization angle of trying to access new investors, new audiences is certainly, I think, the surface level one that makes a ton of sense. But I wanted to transition into something that you mentioned earlier here in this conversation that is another pretty important reason why tokenization matters. So like when I talk to clients or when we're talking with people in the industry, we always explain that most of the benefits of blockchain and tokenization are realized when everything occurs on chain from beginning to end of the life cycle of the asset. That way you can actually capitalize on that compounding across the life cycle.
Right.
In the same way, with a tokenized or Web3 compliant asset, not from a regulation perspective, but more from the technology and the rails, it allows for more interesting and innovative ways of payment for these things. So you mentioned leveraging stablecoins, and this is something that in real estate seems to be a pretty significant problem, especially when you have international wires, international payments, all these types of transactions. It can cause significant delays in the closing of these properties, the closing of these investments because of some of the traditional financial rails. Is that an opportunity that you see being provided with Hedera and with the different solutions that they bring to the table?
Absolutely. Like I said before, is your traditional investments for real estate could take 6 months to close just because of the process of going through escrow and all that. But 6 months is a long time. If we're using blockchain now, we shorten that process significantly because, for example, stable coins we can accept and right away transact on. So they can give it to us within minutes, and then we can send them shares within minutes to their wallet. Going digital to digital is far easier than going digital to fiat back to digital, right? So we see the M1 supply of digital currency, mostly stable coins, increasing significantly. Look at Visa is now accepting stable coins. JP Morgan Chase is now accepting stablecoins on deposit. So you have all these institutions now who are now bringing on stablecoins into their ecosystem. That increases the amount of digital asset currency in the marketplace, which I think is going to be great for digital securities of real estate, because people are going to use that as a matter of a vehicle to buy into an asset class that they desire very easily and seamlessly on their cell phone. I'm even told that Apple is going to be having wallets built into the Apple phone so that people can hold their assets on their iPhones just seamlessly, which I think is where we're headed. And so when you look at, like I said, you got to always think about the population of people who are now moving in this direction and the technology to move in that direction and the assets and currencies moving in that direction. This is where we all want to be.
Right. That makes sense to me. So let's take it back to your fundraise now. We were talking about finding strategic investors. And so when you're raising capital, some of our audience may have experience investing in companies or raising capital themselves. If you don't, you always want to find a few investors that you might consider, strategic investors. And that doesn't just mean the strategy, but also, usually in size, they're going to be larger people that are taking an active position. They really want to help out. Then you may have a lot of smaller style investors that come in, and certainly with a regulation CF like you're building, you're really, I would imagine, trying to build a large network of investors that are trying to participate potentially in a smaller check size than what you might see from a private fundraise traditionally, maybe more like a stock investor, right? Somebody that's buying a public company might only have a smaller position, certainly 4 or 5 figures as opposed to 6, 7 figures in maybe in a private company. So what types of investors have you been targeting? What types of investors have been the most excited about the deal? And where do you think that you guys fit into the market from an investing perspective?
Good question. I mean, we've been focused on your public investors. We had some Reg D investors come in with larger capital, but the last RegCF was for smaller investors who want to be a part of our journey. You think about the number of investors out there who are not accredited, but need to grow. They want to become to that accredited level. Only way you can get there is by making smart investments with their excess disposable capital. So we think by investors coming on board and being connected to us, not only they're buying a company that's just exploding and going to be, I think, the leader in the industry, multi-billion-dollar company at some point, but it also gives them along the ride access to deals. I mean, we have lots of deals on our platform right now. We'll probably have 20 times the number of deals than that by in the next 2 years. And investors are deal junkies. They always want to see deals to compare. And now we'll be able to offer them deals that are direct investments, funds of a pool of the deals we put together, making it attractive for them to come in with a small level of commitment so they can learn the process, become more savvy investors, understand the financial statements. So that journey, I think, is very important to work with RedSwan to have access. But I think overall, it just gives them a way to get into the business. And so it's not all about just, putting money in and just waiting for the long game. No, you're putting money in because you want to learn about blockchain and about digital assets. You want to learn about the investment opportunities that are not just in the United States, but globally that we're offering. And you also want to be along the ride with RedSwan as their stock value continues to go up. So that's why we're targeting mostly the RegCF non-accredited investors, but we're also keeping an eye out for strategic investors because there are many companies that are very well aligned with RedSwan in terms of our overall business model. Real estate companies are large and they have, I met another company that it was actually the owner of Keller Williams, huge company, right? Almost 40,000 brokers. Well, that industry is changing. It's very, very competitive, but also the older brokers are kind of fading away. The younger brokers are coming in. They're trying to figure out how to make money, and it's very competitive. Adding another tool to their war chest, in terms of firepower to offer a client this digital shines a light on them to make it different. I get through any door I want to any sponsor in the world. I can go and talk to the CEO. Why? Because I'm bringing a totally new solution that makes sense that they want to learn more about. Well, if a broker who's selling houses or selling real estate, commercial real estate, is trying to get to the door to their favorite customer and they don't have anything new to talk about, if they come in talking about digital assets in terms of capital, I can almost guarantee they would have an appointment set to meet. Now, the rest is up to them in order to win that assignment, but they will get through the door because they're offering something different. And I think the industry needs something different because what we've been doing for the past 300-400 years is kind of getting stale and also not as competitive and not as efficient as what we're seeing going down into the future. So yeah, I believe that strategic investors like the big real estate companies, the big banks, large companies that have customers who are making investments probably want to be tied to us for that deal flow, right? If they can get a piece of that deal flow, think about from an IRA's perspective. An IRA comes to us and they says, look, we have these wealthy clients who want to redistribute their assets, and they want to redistribute the assets and they want to put more of it into alternative investments, and they think they like digital alternative investments or real estate better because of liquidity. Well, these are customers, the IRAs, I'm saying, are great relationships for us because they're bringing us a lot of customers. We're tokenizing those assets, and they now get a chance to asset manage those assets. When a customer normally buys real estate, I don't care if you're multi-billionaire or just have several millions and you buy real estate, that is not on the books for your asset manager. Real estate is off the books. So your stockbrokers and IRAs don't get a chance to manage that because it's not a security. When we now create that into security, that goes on the books as AUM, right? So it's adding to their AUM, is more liquid. They can transfer it faster. It's just a better product for this investment wealth advisory industry altogether.
That's another really cool point about building AUM for the asset managers. And then not to mention, you just can kind of loop that into the efficient credit systems that they provide for all the assets under their purview. I think that makes a ton of sense.
Yeah, I told you I learned a lot over the past couple of years.
Yeah, no, really appreciate your insight. I mean, you are such a wealth of knowledge. And, I think that something that you said that was extremely poignant around investors that are trying to participate. You have tokenized real estate deals on your marketplace. And the difference between an investor that's investing in RedSwan, the company, versus a tokenized real estate deal is that if you're buying a tokenized real estate deal, you're probably not necessarily purchasing that to grow your wealth incredibly exponentially, right? Because it's a real estate property. It's a wealth preservation tool that generates yield, but you're not necessarily going to buy a couple shares of a property and 100x your money. That's not how the real estate game works.
That's true.
But you can do that when you're considering that, all right, a bet on RedSwan, the company, is a bet on the tokenized real estate industry growing. As that industry grows, RedSwan is one of those funnels that will rise with that opportunity. And so if you believe in tokenized real estate, there's two ways to get involved. There's buying actual tokenized real estate, which is nice. Or if you're an investor that wants to your point, learn more, understand what's going on with these deals, understand the marketplace and the business practices, while taking a more agnostic bet, not on one property or on one asset, but on the industry as a whole. That's kind of where the real estate RedSwan tokenized deal comes from, and it's kind of that perspective. Is that kind of a fair way to look at it?
That's a perfect way of explaining it. Thank you for that, because that's exactly right. I mean, buying shares in our company, you're buying into the industry. You will have the growth of the industry you'll participate in. So we're at the infancy stage of the industry right now, and we've tokenized, $5 billion, where we have our arms around almost $10 billion. We plan to be $300-400 billion company of assets under management. And there's going to be more than that globally that's under management with different companies. But buying into that space and starting early means that as the industry continues to grow, your stock value will continue to grow with RedSwan, because we're going to continue to make sure we're market leaders of this industry. So I think that's one way that you can participate and greatly benefit from it, but also having the direct access, because some of our VIP investors will get deals before they even put on the marketplace. So you'll have direct access to projects that are coming out, and you make your money in real estate when you buy. If we're now tokenizing assets that are in distress or assets that have been written down in value because of the new interest rates or the new mortgage they have, you're able to buy at a great price, and that increases your overall investment in your real estate. But the problem is, if you're not involved, you don't have that visibility. You don't have that access. And I think that if you're not in the game now, you're going to be sorry that you didn't get in the game, because technology moves fast. Think about all the people who didn't want to have a website for their retail business. They figured that, hey, it's okay, I'll catch up, it's not necessary. They fell behind, and now that's 60% of all retail sales is done online. So if you started early investing in companies that were building websites, commercial websites for retail, and you were part of that, think about the exponential growth of that investment today, rather than 15 years ago. Same thing what we're doing right now. As the real estate digital industry grows, there's $42 trillion of investment real estate in the United States by itself, a lot more overseas. But think about that. We now are just talking about 5 billion, 10 billion of assets. When we start talking about $1 trillion of assets under management that's been tokenized, that's huge growth for investors coming into RedSwan right now. So we're being very cautious with our capital, with our stock. We're only issuing, raising $5 million. We don't want to raise more than we need. We think $5 million will stabilize our team for the next level of growth, stabilize our technology, and also give us the marketing funds to continue to build business development, but also increase adoption, because we really want to make money through revenue production. We want to make money the old-fashioned way, by revenue coming in, streamline expenses, and making a nice profit, not through raising capital, because raising capital is just selling.
The age of that is over.
That's over, totally over. And we like our capital. We like our stock. We don't want to just give it away in early stages. We want our business model to work. We want to we're already generating revenue. We want to continue to generate more and more revenue, because that means there's growth taking place. As we keep on bringing on properties to our platform, those sponsors are paying us to put their property on our platform. They're paying us to market their property to all the investors out there, and they're paying us to successfully sell those assets to investors. So we're a going concern, and all we're trying to do is, fortify the resources to continue that growth at a good level, at a good pace, I should say.
To wrap it up here, I understand you're about to embark on a roadshow and really start talking to big players around the world. Can you walk us through what your next steps are for yourself, and where you're taking your talents, so that anybody that's watching, anybody wants to participate, what's going on, what's your next steps are?
Sure. Yeah, we have quite a travel schedule over the next 4 or 5 weeks. We're going to go to San Francisco in a couple of weeks, participating in the CoinAlt panel discussion there with some great people in the industry. Looking forward to that. I'm a guest speaker. Then I'm flying to Qatar. We have a new assignment, I said, that's in the GCC. Our clients both in Qatar and Dubai. So we're going to meet with them to take photographs of all our assets. We have 34 new assets, $3.4 billion in value, and that's net value. And so we're going to get those on our books, get them tokenized. We're going to create a fund, a GCC fund, so that you can buy into a pool of income producing assets in the GCC, and they're beautiful assets. And then from there, we're flying to Dubai, from Qatar to Dubai, of course, to keep talking to our client and looking at some more assets there. And then we take off and we're flying to Seoul, Korea, where they're having a digital asset STO summit. And I was invited by one of the Korean sponsors of this event. I'm excited about that, because there are other industry players who are going to be there, and also governmental officials from Korea who are really looking at tokenization as a way of doing business for them. And then from there, we're going to Singapore, where we're working with Hedera Hashgraph. We're on the panel with them, and we're going to be sharing the booth with them to do presentations about how our joint technology works. So that's exciting. And I'm hoping that I get to meet with the Hedera council. They have the governing council with all these corporations like Nomura and Microsoft. Well, I talked to the CEO, and hopefully we get a chance to make a presentation to the governing council. That gives us access to these huge corporations and breaks it down for them, so they understand how tokenization can actually help their companies, which is what I always wanted to do. It's hard to do that on a one-on-one basis, but if you can have an audience of CEOs of major corporations and they're seeing how your work with Hedera could actually help them and with their assets, that's a win-win. And so we're going to do that. And then we're going to come back home and enjoy Thanksgiving.
Yeah. Yeah, that's quite a journey. You've been covering the States. Now you're going abroad to talk and spread the good word of tokenization everywhere. We are behind you. We have all kinds of great stuff queued up with you and your team to be blasting this out everywhere. We want everyone to know what's going on in the crowdfund. Where can they check out more information on the RegCF deal if they want to get involved?
Just go to RedSwan.io, and there's going to be the button for invest in RedSwan. You click that button and you hit our landing page. It shows you, you can now pull down the Form C. You can put on our deck, and you can buy shares. So, I mean, that's the best way to reach us. We did break down our shares in 3 different levels. So there's a general patron investor. Minimum is $500. Then there's a VIP investor that gets a lot of perks in terms of direct access and so there, and then there's the whale level, whale swan level for people who want to make bigger investments. But I think it's an opportunity. Friends always tell me, "Hey, you didn't tell me you're raising capital." And as we get more successful, they keep saying, "Hey, how come you didn't tell me?" Well, now I'm letting everybody know this is the opportunity to buy into RedSwan because we may not have another opportunity like this.
The opportunity of a lifetime. Ed, thanks again for joining us. We are it's such a pleasure talking to you. I've known you for so long, and your company, I think you're doing things the right way. I think you're measured and incredibly tactical with your approach. And I just really wish you the best of luck, and I'm happy to be alongside you for the ride.
Hey, thanks, Kyle. I'm glad you're alongside of us. I look at you as a partner in the business. You wrote a great book, and I think you're a major icon in the industry. So yeah, this is a dual ride, and I'm glad we're working together. So thank you for inviting me on this show and help me present our company that we're offering shares for. But I look forward to continued relationship.
Wonderful. We'll talk to you soon.
All right, buddy.